Good evening, and welcome to the Crypto Overnighter. I'm Nicodemus, and I will be your host as we take a look at the latest cryptocurrency news and analysis. So sit back, relax, and let's get started. And remember, none of this is financial advice. And it's 10 p.m. Pacific on Thursday, October 5th, 2023. Welcome back to the Crypto Overnighter, where we have no sponsors, no hidden agendas, and no BS. But we do have the news, so let's talk about that. Tonight, we delve into the simmering pot of crypto security, battles against regulatory overreach, the controversial rise of central bank digital currencies, and the struggle for financial freedom and sustainability in the cryptosphere. Buckle up, you won't want to miss it. Friend.tech, a decentralized social network, has been hit by a series of SIM swap attacks. The damage? A staggering $385,000 in Ethereum drained from accounts of 4 users. Crypto sleuth ZachXBT tracked the on-chain movements and linked them to a single hacker. This individual managed to empty the accounts of 4 victims in less than 24 hours. For those unfamiliar, SIM swapping is a tactic where the hackers trick mobile carriers into transferring a user's phone number onto their SIM card. Once they have that number, then they can access online accounts that are linked to it. One user, Some Fatty Tuna, posted about the ordeal. The hacker was able to execute the SIM swap from an Apple store, switching it to an iPhone SE. Another user, King Magaga, reported the attack in real time, expressing his helplessness as he watched his account being drained. This is not an isolated incident. Earlier this week, 4 other Friend.tech users reported losing around 109 Ethereum due to SIM swaps. Friend.tech has been silent on the issue, but they've announced a new feature that lets users log into their accounts without using phone numbers. Manifold Trading, a crypto investment firm, issued a warning, stating that if an attacker gains access to a Friend.tech account, they could rug the whole account. They estimate that around $20 million is at risk from SIM swaps if one assumes that 1/3 of Friend.tech user accounts are connected to phone numbers. SIM swap attacks are on the rise, especially in the crypto space. Last August, data from FTX, BlockFi, and Genesis were exposed in similar attacks. Even Ethereum's co-founder Vitalik Buterin was targeted. The takeaway? Be cautious. Use authentication apps like Google Authenticator instead of SMS-based two-factor authentication. Your financial freedom is at stake, and as we've seen, centralized systems like mobile carriers can be the weak link in your security chain. Intriguing, isn't it? Decentralized platforms like Friend.tech aren't always the safe havens they promise to be. But, shifting gears for a second, what happens when a centralized exchange attempts to decentralize? Chaos. That's what happens. Chaos. For our cover story tonight, we look into the chaos unfolding at JPEx, a Hong Kong-based crypto exchange. The exchange recently transitioned into a decentralized autonomous organization. It sounds good, right? Not so fast. This move has sparked a firestorm of controversy and has left many users in a state of financial limbo. JPEx announced its DAO transition on October 4th, 2023, claiming that 68% of its users voted in favor. The DAO model was supposed to democratize the exchange, turning users into shareholders eligible for dividends. But here's the kicker. Users claimed their assets were converted to JPEx's native token, JPC, without their consent. Once converted, these assets became about as liquid as a brick wall. The DAO dividend scheme was purportedly designed to tackle JPEx's liquidity issues. It allowed users to convert their frozen assets into DAO stakeholder dividends at a 1-to-1 ratio. JPEx even offered a repurchase option at 30% of the conversion price after 1 year and 100% after 2 years. But the reality? Users found themselves unable to withdraw or trade their assets, essentially turning their investments into waste paper, as one user put it. Now, why should you care? Well, JPEx's move comes amid a backdrop of legal challenges. Hong Kong authorities have arrested multiple individuals associated with the exchange, accusing it of operating an unauthorized crypto platform. The exchange is also under scrutiny for defrauding over 2,300 people of 1.4 billion Hong Kong dollars, roughly worth 187 million US dollars. From the chaos in Hong Kong to a courtroom in the Netherlands, when it comes to wresting power from decentralized authorities, this next segment is a must listen. Bitvavo and Coinmerce, the successor to Binance in the Netherlands, have won a partial victory against a staggering $2.3 million in fees imposed by the Dutch Central Bank. A Rotterdam court ruled that the DNB overstepped its legal authority when it levied these fees for registration related to anti-money laundering compliance. The court's decision is a challenge to the DNB's authority. It declared that the bank's assessment of registration requests went beyond what's legally permissible under European Union anti-money laundering laws. In layman's terms, the DNB tried to play hardball, and they lost. The court stated that it's unlawful to charge supervisory costs to these companies for the year 2021. Now let's talk about the implications. The Netherlands has been notoriously strict with crypto firms. They've imposed millions in fines on giants like Binance and Coinbase for failing to register. This rigid stance even led Gemini to exit the Dutch market. But this court ruling is a game changer. It's a win for the little guy. Patrick van der Merge, president of the United Bitcoin Companies of the Netherlands, expressed satisfaction with the court's decision. He noted that the court recognized a violation of the registration obligation as outlined in EU anti-money laundering legislation. The substantial costs associated with these fees should not have been passed on to crypto companies as they were deemed to be beyond the DNB's mandate. Financial regulators in Europe are generally not taxpayer-funded. They charge operational costs to the entities they oversee. In this case, crypto supervisory fees in 2022 amounted to €2.2 million, roughly $2.3 million US. This amount tends to increase annually, but this legal victory could set a precedent, challenging the ever-increasing fees and overreach of regulatory bodies. So this legal win underscores the dynamic nature of crypto regulations. It shows the industry's commitment to contest these boundaries and the application of government oversight. It's a win for financial freedom, a win for decentralization, and a win for everyone who's skeptical of centralized power. A win in the Netherlands, but what about the war for financial freedom in Argentina? Up next, we take a look at a central bank digital currency that's stirring the pot in the upcoming elections. Don't go away. Juan Agustin de Telles Noguera is a director at Argentina's Central Bank. He publicly endorsed Minister of Economy Sergio Massa's promotion of a central bank digital currency. The aim? To remedy Argentina's ailing economy. Noguera believes that the digital peso could stabilize the nation's economy by 2024. The key feature? Traceability. This would broaden the tax base without raising taxes. And God knows governments sure do love some taxes. Noguera's confidence in the digital peso is unambiguous. He assures that a CBDC will be introduced gradually. It will coexist with cash initially, with a full transition to digital at the project's end. This move aims to solve Argentina's monetary woes. The Argentine peso often competes with the US dollar, even for local transactions. Massa, also a presidential candidate, has pledged to launch a CBDC to tackle Argentina's persistent inflation crisis. He opposes the idea of dollarization, arguing Argentinians should defend their own currency. Massa's stance starkly contrasts with Javier Milei, a pro-Bitcoin, anti-central bank candidate. Milei aims to abolish Argentina's central bank and adopt the US dollar. The general election is slated for October 22nd. Polls suggest a tight race between Massa and Milei. Data indicates that Massa has strong support in Buenos Aires, while Milei is favored in rural areas. Milei has long been a skeptic of central banking, referring to Bitcoin as a reaction against central bank scammers. The Argentine peso plummeted over 99% against the US dollar since December 2003. Inflation in Argentina is among the highest globally, trailing only Venezuela and Lebanon. The CBDC, therefore, is not just a digital transition, but a desperate bid to salvage a crumbling economy. Unlike the US, the CBDC is a pivotal issue in Argentina's upcoming elections. It's seen as a potential solution to the country's economic and monetary problems, including its sky-high inflation and unstable local currency. But there's also a point of contention between the candidates, reflecting deeper ideological divides about the role of central banking and digital currencies in Argentina's future. So as Argentina heads to the polls, the fate of the digital peso hangs in the balance. Will it be the game changer that Massa and Noguera believe it to be? Or will Milei's skepticism and the public's distrust in central banking systems turn the tide? One thing is clear, the outcome will have far-reaching implications, not just for Argentina, but for the global conversation around CBDCs and financial sovereignty. Argentina's debates over CBDCs might have you questioning where blockchain fits into all of this. Well, our next story showcases a company that's been ahead of the curve. Ripple's doing something interesting, and you'll want to hear about it. Ripple just scored big. And this time, it's not in the courtroom. The company clinched 2 prestigious awards at Juniper Research's Future Digital Awards for FinTech and Payments 2023. The accolades, Sustainability in FinTech Innovation of the Year, and Platinum Award for CBDC Innovation. Now, let's start with the Sustainability Award. Ripple's US dollar-backed Palau stablecoin is the big star. This stablecoin is issued on the XRP ledger, known for its carbon-neutral status. Now, it's a big deal because the ledger has facilitated millions of transactions over a decade. It ensures robust privacy and security for tokenized assets. So Ripple isn't just talking the talk, they're walking the walk when it comes to green fintech. Now, onto the Platinum Award for CBDC Innovation. Ripple's platform is transforming the way that value is moved and managed globally. They're addressing long-standing inefficiencies in the financial system. The aim? To foster transparency, reduce costs, and open up new business models. Ripple is deeply involved in the CBDC pilot projects with 5 central banks, including Montenegro, Bhutan, Hong Kong, and Colombia. They're in talks with over 20 nations about potential CBDC initiatives. Juniper Research didn't hold back in their praise. They highlighted Ripple's enterprise solutions as faster, more transparent, and more cost-effective. They emphasized Ripple's commitment to creating real-world change, specifically in identifying use cases where crypto technology will inspire new business models and create opportunities for more people. But Ripple's not alone in the glory. Niam, a longtime Ripple partner, secured the Gold Award for the best cross-border payments platform. They use Ripple's XRP-based cross-border payment platform on-demand liquidity. This recognition further cements Niam's position in the cross-border payment space. So what does this mean for crypto? It's a signal that blockchain companies like Ripple are not just surviving but thriving, even as they disrupt traditional financial systems. They're not just winning legal battles, they're winning the war for the future of finance, and they're doing it sustainably. This is a big picture shift, folks. Ripple's awards are more than just trophies on the shelf. They're a testament to the transformative power of blockchain and crypto technology. And they're a warning shot to central banks and governments. Adapt or get left behind. Ripple's awards are making waves, but what if we told you the Hong Kong Stock Exchange is planning something that could reshape global finance? Don't forget to like, follow, and subscribe if you're enjoying the show. The Hong Kong Stock Exchange, or HKEX, just launched a blockchain-based settlement platform. And this isn't just any platform. It's a smart contract-powered behemoth called Sinaps. Now, what's the big deal? Well, Sinaps is designed to streamline the Stock Connect system, which links Hong Kong stock markets with those in mainland China. The platform will use smart contracts to execute post-trade workflows, reducing settlement risk. Imagine a world where settlement instructions are created for all parties along the chain all at once. That's what Sinaps aims to do, providing near instantaneous status updates to everyone involved. The average daily turnover of the Stock Connect system totaled a staggering $15.302 billion in the first half of 2023. That's a 5% increase from last year and a 50% jump from 2020 levels. With Sinaps, HKEX aims to boost these numbers even further by enhancing operational efficiencies and transparency. The technology behind Sinaps is DAO, an open-source smart contract language. It can synchronize data across both blockchains and centralized databases. This is like having a universal translator, but for financial transactions. Sinaps is set to launch on October 9th, and the buzz is palpable. Glenda So, HKEX Group Head of Emerging Business and FIC, stated that the platform will not only improve post-trade efficiencies, but also build a stronger ecosystem to support market growth and investor strategies. Now here's my take. While Sinaps is a step forward, it is crucial to keep an eye on how it plays out. Will it truly decentralize the financial markets, or is this just another tool for the big players to keep their grip on the system? Only time will tell. So mark your calendars for October 9th. The launch of Sinaps could very well be the catalyst for a new era in cross-border stock trading. One that's more transparent, more efficient, and, dare I say it, more trustworthy. So, what happened? Friend.tech suffered a devastating SIM swap attack with $385,000 worth of Ethereum stolen from users. Despite its decentralized ethos, Friend.tech demonstrates that vulnerabilities can still persist. JPEx's transition to a DAO has led to a legal and financial quagmire, leaving users in a state of limbo. The Hong Kong-based exchange may have bitten off more than it can chew. Bitvavo and Coinmerce scored a win against the Dutch Central Bank, pushing back against hefty anti-money laundering fees. It's a victory for crypto firms and a blow to regulatory overreach. Argentina's upcoming elections bring CBDCs to the forefront. The digital peso is being touted as a remedy for the country's economic woes, but not everybody's buying it. Ripple clinched 2 prestigious awards for sustainability and CBDC innovation, showcasing that blockchain companies can compete and win on a global scale. Lastly, HKEX's Sinaps is poised to revolutionize stock trading between Hong Kong and China, but the jury is still out on whether it will democratize finance or solidify existing power structures. Tonight's episode delves deep into the contrasting worlds of vulnerability and victory in the crypto landscape. From Friend.tech's glaring security lapse to JPEx's messy DAO transition, it's evident that the road to decentralization is fraught with challenges. Yet there's light at the end of the tunnel. Legal wins in the Netherlands and Ripple's accolades underscore the resilience and innovative spirit of the crypto community. As central bank digital currencies rise in prominence, their adoption becomes a contentious issue, exemplified by the political climate in Argentina. And as technology advances, platforms like HKEX's Sinaps could be game changers, or merely tools for the powerful. The crypto world is evolving, and whether it's for better or worse depends on the choices that we make today. And that's going to do it for us tonight. I want to thank you, my listeners, because when you stop listening, I will stop talking. If you enjoyed tonight's show, then please like, follow, subscribe, leave a rating, or maybe a review. And in the meantime, we'll see you tomorrow night.